Hello everyone, good morning, it's Saturday. Today is Friday, October 21st. We're gonna be talking about week's price action trades that occurred. I think that's pretty much it. We're gonna talk about the trades that occurred, which based on what I remember were only two, one on Tuesday, one on today, Friday. Friday's one was a little bit complicated due to reasons we'll talk about now. And yeah, we'll begin by saying that this week I was expecting various price action just following the major trend bias, and I was completely wrong about it. Price did go basically higher, although we have one day going bearishly, and this day higher than lower, basically consolidatory, right? And really not much price action overall on this day specifically. But as you can see, it opened here, it traded all the way up to this. So simply got as high as, not as high as, but basically higher than the open, which means that we ended up having a bullish week. Now, let's talk about day by day price action using the sessions thingy. And there's multiple things that I want to talk about today. And first of all is this. Today, right, we have Asian session, London Kilson. I think this is Asian Kilson as well. London Kilson, New York Kilson. What do we have through London Kilson, through New York Kilson? Move against the trend, continuation higher, right? On this day we had a, well, actually let's just focus on this. So we have the 5 steps from the 50-minute. We could say we do, we could say we don't. In my opinion, this is a clear run and sell side liquidity, but ideally the run and sell side liquidity, as an example, would have been something like this. It's lower and starts going aggressively higher immediately, right? In this case, it goes slower. At that point, this could have turned higher, basically would have been more than enough for me to consider this as a run sell side liquidity. To then see price high, to see price going higher, right? Price does go higher, but it does go a little bit later than expected, and that's a run on 27 pips, basically. In my opinion, that's a lot, so I don't really consider this as a low being run, as the liquidity being run, right? Now, if we go back, we have this little bit of a range here that, as you can see, created a couple of lows there, a couple of lows here, although some were taken. Thing is that out of all of that range, we see that this is the lowest point, and we could argue that we have a couple of mitigations in and around these levels, right? Where price just mitigate a couple of times, respected the level, and continued going higher, right? Which means that price has sell side liquidity, and as you can see, it nicks that liquidity by a few ticks, by a few pips maybe. Haven't really checked. And after that, so from here, that's 2.3, 2.2 pips of a run and sell side liquidity. Definitely good for me. So if you want to apply this 5 steps like that, we definitely can, because right, we've step 1, run and stops. Step 2, market shift. Step 3, 50-minute fair value gap created where? In between the high and the low, right? The move that actually causes the market shift. That's where the fair value gap has to show up, and in this case, that's exactly where it shows up. So can we take advantage of this? We definitely can, right? The problem that I have with old lows, like this one as an example, or not old lows necessarily, but old lows that are far from the chart that I can't really see, just like this, basically. I don't really give them that much importance. I just don't like using that as a step 1. I definitely consider it as a run on liquidity that could cause a change in direction or some kind of retracement at the very least, which is what I was kind of expecting. And as you can see today, basically what ended up causing is complete market shift and continuation higher quite aggressively. Very likely going above this couple of equal highs that we have here created on Tuesday, right? Which from my point of view at one point was the high of the week. So can we use these 5 steps? I don't use it that way, right? This is not a way that I use it, so I cannot take this trade. I would have not looked for opportunities in the lower time frames. And honestly, today I wasn't even on the charts, so I completely missed out on this. So I can't really say if I would have been interested to look for lower time frame entries. But as you can see, price taps the POI here, goes higher. There's no market shift. There's no fair value gap. Second mitigation, no market shift, no fair value gaps. Third mitigation, what do we have as an extra here? Run on sell side liquidity, right? Aggressive move higher, market shift above this high or above this high, whichever you feel most comfortable with. Would have been more than enough for me. This one, and we have this and the other fair value gap that is up here, right? Because ideally, but when we are trading like this, if we have two fair value gaps that price could respect, we'd go for the higher one, right? Just in case it mitigates that one and starts going higher. Because if we were to use this one, we'd run into a little bit of issues that price might not get all the way down to this one. Ideally, it should either way, right? But yeah. So what would have been my target? Well, this high gave me 4.35. Yeah, that would have been more enough. I don't think I would have gone for something as large as this. That, as you can see, would have given us 8.83. And Tuesday's high, which is all the way up here, which due to the aggressive move on price is highly likely going to be mitigated before the close. As you can see, would be pretty close to it, right? And talking about 12R. Is this a good trade? Yes, definitely. I do believe we have some really good confluences to be looking for buying opportunities inside this 50-minute and the 5-minute fair value gaps as well. It's just something that I would have not participated on. We do have the 5 steps in a weird way per se, but as an example, for me, the 5 steps are something more like this. We have this low, right? Price takes that low, and if, as an example, we would have seen market shift and fair value gap, that's really good enough. Right, I'm looking for that entry, and we'll see the Tuesday trade as well that you'll see, or the 5 steps the way that I like seeing them. Right now, let's jump into Thursday, which, if I remember correctly, I actually didn't have any kind of trades, and we have price ranging a little bit through London. Although, as an example, the student sent me this from sell side liquidity there. Actually, the market doesn't show us that low being taken as liquidity, sadly, because FXCM changes the weeks, so let's just count this low, but this low was taken as sell liquidity down there. Starts going higher, market shift already happens here in my opinion, right? If you wanted to be more conservative, this would have been, you would have missed out on this entry because price comes back down, mitigates fair value gap, and it gives us a lower time frame entry as well. Let's look at it. Mitigates, first reaction, no fair value gap, no market shift, nothing. Goes aggressively lower, mitigates even this fair value gap in here and an order block. I didn't talk about order blocks that much. And tiny fair value gap in there, not even visible. And then this one. This would have been likely the one. Market shift happened on this one. If you wanted to be more conservative, you have this break as well. We have everything we look for. We just need to execute the trade. At the ticks for the spread, and what are we targeting? Above this couple of equal highs would have 3R. I don't think I would have gone for just 3R. 4R is my bare minimum, and we can get it right there, right? I think that would have been a pretty good enough target. If I wanted to be more aggressive, I could have looked for this equal highs, but that's just a little bit impossible for me. Now let's jump into New York Kilson this day. That did have some interesting price action. Let me point out this equal highs first. I know it takes them, don't worry, we'll talk about that. We also have this right here. Give me a second. This right there. And this with this market shift and this fair value gaps, right? Let me use this one because the other one wasn't mitigated, and let's talk about what happened here. So session opened around here at 8:30, right? Opens, trades a bit higher. We had news, I think we had news. Trades a bit higher, right? Taking this high, basically, in the lower time frames, it looks a little bit better. And then aggressive and lower, market shift, fair value gap, price race into that. Can we look for lower time for opportunities? Yeah, we can, but we'll see what happened here. And also the fact that look at where the 50% is. Much higher from where price is mitigated. So that's something that I hate seeing, because the times that I've traded on an area like this one, where we have a higher area, better positioned, yeah, just better positioned, I tend to take losses on this one, and then taking the win maybe on the next one, right, on the higher fair value gap, depending, of course, if we actually do get an entry. Now, as an example, what do we have? Mitigates it, and I want you to pause and look at this. Tell me if you see an entry, and we'll discuss it if we actually do have one or not. Cool. Let's so it mitigates it at first, causes a move lower. This could have been because you're a market shift. There's no fair value gap. Keep in mind that at this point I was expectating this without much of an intention to actually take a trade, right? I'm pretty confident that I would have not traded this at all, right? Whatever actually showed up. But what I did say, actually I didn't say it on Telegram, I was recording the live session. What I did say is that if this high is taken as buy side liquidity, even though we're not getting to the 50%, which is around these levels, I will take a lower time frame entry, right? Just because we have a little bit of buy side liquidity being taken, and of course, if the entry later showed up clear as usual, right? Just the mitigation, the fair value gap, the market shift, and everything we look for. Now, again, no fair value gaps were formed, and as an example, you can see this one, that the market shift is here. I'm actually do it with the line so you can see it doesn't actually happen. In the market, it didn't happen either, right? Because remember that I say that the weeks tend to change from time to time. The thing is that this is not a fair value gap I would have taken either way, right? We're really low into the move, and I would have not expected to move lower, even though, as you can see, it does happen. This is not a fair value gap that I would have traded. Again, at this point, all that I'm expecting for price to do is to trade higher. I wanted it to trade higher to get into a better price, to maybe take some buy side liquidity, to then maybe considering taking a trade inside this fair value gap, or ideally on the higher one. So in my opinion, no 5 steps to take here. Maybe 1, 2, and 3, but this is a pretty low fair value gap, right? Pretty low fair value gap. Now, trades aggressively higher, and what we have here is this actually. You can see here how we have a pretty strong high that caused an aggressive move lower. That actually happened through the London yield zone, which, if I remember correctly, yeah, there was a lower time for opportunity here and everything. But the thing is that random buys out liquidity, and look at where the equal highs that we have on the day, right, happen. Right below those couple of equal highs, right? If we zoom in here, we can see how price was basically ranging here, then tries to go through the level, fails to, just respects this couple of weeks, right? And then starts going aggressively lower. That's a lot of buy side liquidity being basically manipulated, engineered into the market, and whatever you want to call it. And then price gets close to the area, reacts here, quite an aggressive move lower, goes higher again. As you can see, it does go through it, but this is what I tend to call something that it's not really a run, right? Because let's put ourselves in the mindset of a support and resistance trader. We understand that this is a low that theoretically will hold due to price history, right? Price got to the level and failed. If we wanted to go further into it, we can see back here we have a couple of reactions, right? So why would price not continue to respect the level? So are we going to use a stop loss of 1 tick, or well, 1 pip? I don't think we are. Are we going to choose a stop loss of 5 pips? Maybe we are. 10 pips? Maybe. But of course, we're getting into a little bit of a low risk to reward ratio, assuming that, well, you want to say that this is support and resistance, so you're aiming at this couple of levels where price has mitigated a lot. That's a 1 to 4.5, not gonna lie, it's a pretty good trade, right? But here's the thing. That's why the run on that high, in my opinion, it's too minor. It barely goes above the level, and there are no traders that actually trade with a 1 tick stop loss, right? Because you're getting taken out with spreads already, so it's really not useful at all. So as an example, if the 5 steps form like this with this run on stops, I tend to use it either way, right? Because as I've mentioned a couple of times, I don't really mind which high, which low is taken as liquidity, or how it is taken as liquidity. Thing is that it is taken as liquidity, and what happens afterwards, right? What happens afterwards? So as you can see here, price goes lower, but then just takes it as buy side liquidity, and then we see a little bit of a market shift. So in my opinion, these are equal highs, right? I don't think that price actually took all of the liquidity about the high with that run, with that tiny run. And as you can see, then it does do it with a couple of pips, 8.5 pips above the high. So that's something, right? That's something much better than the couple of ticks that we saw previously. So is that it? Yeah, this happens after the session, but thing is, it goes above all of those highs. Market shift down here, or on this one, I would have considered it on this one. Could have looked for lower time for opportunities in here if I wanted to participate after the kill zone, which I don't like doing. And it does continue going lower. There's a fair value gap in here, but there's no market shift for us to actually say that that's a valid fair value gap, or at least from my point of view. So I don't think this was a day that I could have traded at all. I was looking for opportunities in here. Nothing really happened. Could have I looked for opportunities inside this fair value gap? No, I mean, not based on the way that I trade, right? Could have I said, okay, so market shift, fair value gap, and the run buy side liquidity, sell side liquidity was this one? Yeah, maybe. Again, this is exactly like the one we saw. In my opinion, it goes a little bit too low, right? And not only that, but I think that's it, isn't it? I don't know what else. Oh yeah, not only that, but also price doesn't get back up into the area. And when it does it pretty late already outside of the kills, and so just not a trading day at all. And something that people need to understand is that as well, we're not going to be trading every single day, and that's not actually something bad. Because as an example, in the past, sometimes I take this as improvement as well. First of all, not every day we're going to be trading, and as an example, me personally, those days that we weren't trading at around the end of the session, around the end of the kill zone, I would just try to force something. Right? I would just try to force something into the market, saying, okay, so we have this, multiple confluences to be going into this direction, so might as well just try to take advantage of it, right? Put an entry, 2 pip stop loss, 3 pip stop loss, 5 pip stop loss, and let's see where we get, right? And that would just lead for me to take losses, and then trying to take another trade to cover for that loss, that would then leave me on even further drawdown, right? It's just completely unnecessary to be bothering about that, because as an example, today, if I would have actually traded, I would have been, as an example, let's a little bit of an example, right? Let's say 30, right? Let's suppose 720, jump onto a chart. This is what I have. I mark this low, I mark the high that's being created, the fact that we took buy side liquidity, the fact that this move took a lot of buy side liquidity, then maybe this is where I stop analyzing. And this is basically what we have. This sell side, this buy side just taken, so we could see lower prices from there. We could see a fair value gap being traded that then leaves lower time for opportunities. Thing is that I don't trade up to 830, right? So I just analyze for maybe 15-20 minutes, leave the charts completely, looking at the charts from the phone for every maybe 15-20 minutes, right? Until 8:30 I jump back onto charts and I say, okay, so this is buy side, this is buy side, this is sell side, this liquidity, I had this liquidity drawn, was taken, so we could see higher prices from here, maybe a retracement to take some buy side liquidity to continue lower, something like that. That's what my pre-market analysis is, right? I just try to determine what could happen based on what we have, and then I just leave the charts. So maybe on this day, today, if I would have been trading, I don't think I would have spent more than 40 minutes in the charts, in front of the charts. I do a lot of things. Sometimes I exercise, sometimes I have to do some chores around the house, sometimes I gotta go out and buy things for lunch and stuff like that. And that's when I do this, because sometimes then when I saw the aggression, I just said, okay, so this is not going to be tradable. Maybe I missed out on this. Again, I don't think I would have actually taken this at all, to be honest, but yeah, let's not ramble too much because I don't want this to be too large. So we saw Thursday, let's see Wednesday. What happened on Wednesday? So London, run and buy side liquidity, aggressive move lower, generates fair value gap, press trace into fair value gap. Also we have a market shift, And I've already discussed this price action through the Telegram, but you can check it out for yourselves. There's a lower time frame entry in this, basically 5 steps, although the lower time frame entry does give us a little bit of an issue. As an example, me personally might have missed out on that entry. It would have depended on multiple factors. Yeah, just check it out for yourselves. Then what do we see? Just continuation of the trend, quite an aggressive move through between the London kill zone and the New York kill zone beginning. A lot of an aggressive move, and we begin the New York kill zone begins around here. As you can see, pretty low into the move. What do we want to see? Price moving above a high, retracing, getting to the 50%, doing some stuff that we can actually use to go lower, right? So what are we looking for? The 5 steps firstly. We get this, right? We get this. This run on liquidity, as you can see, doesn't actually cause a market shift, nowhere for a rally gap. This run on liquidity, pretty high as well, but it does go above this high and above this tiny bit of a high here, right? Aggressive with lower, market shift here, whatever you want to look at it. 5-minute for belly gap, 5-minute for belly gap. Price race into it. If I remember correctly, it doesn't give us an opportunity. And you could say, so what about the buy side? Because we did get opportunities to buy. Yeah, we did. We have a fair belly gap in here. Price trace into it, creates a fair belly gap after a market shift in the 1 minute. It's not mitigated, pulls away, comes back up, backs down, sorry. If I would have left the opportunity, it would have been taken out as a loss. Same thing here, round sells at liquidity, aggressive and fire, market shift, fair value gap, not traded into. When you trace into it, it doesn't give a lower time frame opportunity, nothing for us to do. Price in the lower time frames didn't give us any kind of opportunities on this bearish fair value gaps. After the run on this high, I was still interested, but at no point we saw aggression in price, fair value gaps, and market shift being created all at once. I did take a paper trading here, although I don't think I showed it. No, I was discussing it with the student privately. But yeah, I did take a tiny bit of an opportunity on that, but nothing really out of the ordinary, or nothing that I would have actually taken on a funded or challenge scenario, right? Let's jump onto Tuesday, which is the day that actually has a trade that I could have taken advantage of, yet I didn't. So this is the entire price action that we have. And this is a little bit messy, but let's look at the facts. Run buy side liquidity, fair value gap. There's actually a 50-minute fair value gap. I think it was from this low to this high, or something like that. Price trace into it, lower time frame entry, clear, lower time frame entry, beautiful. This is my target, definitely. I think it was 5R, 6R, or 8R below this low. Don't really remember. The thing is that we get a pretty good entry with the 5 steps through London. As you can see, the high is closed. We can see that liquidity being created, the aggressive move lower. Everything basically just showed up on that price action. Now, New York kill zone begins. New York opens here. Kill zone begins going bullish, right? Bullish, bullish, bullish. Do we have a run on sell side? We definitely do, right? Now, here's the thing. 830 opens here. So what can we actually trade? There's a 50-minute verbal gap in here created before the market shift, right? Price had already traded into it. We have another 50-minute verbal gap in here, but in my opinion, no run on sell side liquidity down here, so nothing for us to actually do. Starts going higher, 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 and it gets all the way up to this high, and immediately it turns around. Right, turns around. You can see the aggression, the displacement, and I actually did a resume today. Don't remember. Thing is that run a buy set, market shift, fair value gap. We have the lower one, as you can see in this case would have been actually the entry. We have the middle one and even the higher one. Multiple fair value gaps. Again, it doesn't matter how many we have, it matters what happens in the lower time frames, right? That's how we know if we want to take advantage of the fair value gap or not. Simply enough. So fair value gap in the 5-minute, price trace into it, and this would have been a little bit messy, not gonna lie. And we have two things. Price trace into it. Here. We have market shift is either this low, or this one, right? Because we have a higher high, higher low, higher high, theoretical higher low, lower high, lower low, right? Which means that this is already a market shift, creating this fair value gap here, right? Meaning that we could have taken that. Ideally, stop loss all the way up there, or stop loss above this high, which clearly would have been a loss, right? So let's look at it from this market shift, right? What can we actually do with this one? Well, this one would have been very complicated, right? Because ideally we are we have, this is what ideally would happen on the 1 minute. Either a structure like this that causes the market shift, creates a fair value gap quite clearly, and we just use that with our stop loss about this high or this one, right? Looking for lower prices. Or price basically just has to break this low. Fair value gaps, we enter on the lower one, stop loss all the way up there, and that's it. Right? That's what we expect. Whatever happens, happens. The thing is that that's what we could get. Now, in this case, this would have been a very complicated fair value gap, and if we wanted to take it on this fair value gap, that would have been clearly a loss, as long as the stop loss is about this high, of course. I could have not traded on this one, nor in this one, because again, we don't really have a market shift. And when we get this market shift, this one is already mitigated, which is something that I don't like using, right? So keep in mind that at this point, I was actually, oh, wait. I thought we were looking at the, okay, yeah, I didn't think it was as hard as this. I thought I was looking at the New York Kilson trade, but this is the London Kilson. Okay, so you can see this would have been, this is why the entry would have been complicated, but yeah, it is what it is. I thought I was looking at the New York Kilson. So New York Kilson, this Wednesday. We're not talking about Wednesday. Okay, I'm so lost, so tired. I mentioned it through the Telegram. I'm really tired, but yeah. So, step 1, round buy sell liquidity. Step 2, market shift and 5-minute fair value gap. Step 3, price raise into fair value gap. Step 4, lower time for market shifts and fair value gap. Lower time for market shift happen, in my opinion, on this low or this one already, right? Fair value gap happens on this. Where is this? Right. Okay. Well, it changed the week again. You can check it out on my Telegram, or if you have some kind of background record of Eurodollar this day. It does trade a tick higher than this, or 2 ticks higher than this. It doesn't just mitigate the level, it mitigates the level and goes a tiny bit further into it. Let me actually find it. There's a very low quality image, isn't it? Or is it just my second monitor just talking at this job? Yeah, okay. So this is a screenshot, so you can see it does trade a tick, literally just a tick. Do keep in mind that we don't have spreads when executing on sells. On buys we do have that, but on sells we don't. And so you can see price trades into the fair value gap. I'm actually, just in case you can't see it, that's right there. All right. Okay, so let's just go back to the import. Price raise into that. What would have been my target? As mentioned through that day, this would have been a pretty nice way to finish the day. That would have been 4.02, so 4%, which is my bare minimum, right? I said that I would have closed 80%. Being honest, I likely would have closed the entire position, but as I said, I would have closed just 80%. It means that I would have closed 80% on this, on the breaking of this low, which is sell side liquidity, and ideally looking for the rest, right, to be taken out here, right? That's what I would have expected, which isn't, as you can see. The thing is that I would have closed 3% of this one, then taken likely either a break even or closing the rest of the partials below this low, or some partials below this low and then a break even. I don't know, probably 3% and a break even later here, or yeah, likely that, right? So 3% profit, that's what it would have been for me. Sadly, I couldn't participate on it. I was on the getting a haircut. I don't know how to say hairdress. No, it's not a hairdresser. Person that cuts hair, right? I was getting a haircut basically, and yeah, try to take it on paper trading with an entry around the 50% of this fair value gap because I wanted to have a better risk reward ratio. Didn't get that, and I would have not been able to participate on paper on Challenger funded trading. London trade, step 1, step 2, step 3, step 4, market shift, fair value gap, step 5. On this fair value gap or on this one, whichever it is. Target, liquidity. Want to be conservative, liquidity. Want to be aggressive, liquidity. Does it get it? It does, right? Just simple as that. 5 steps. Not gonna say more than that. I know I haven't been answering YouTube commentaries. I've just been so tired lately, honestly, that I just can't. Oh, Monday. I don't think we had anything on Monday. Yeah, no, we just had a pretty impulsive start. So, London, aggressively lower, aggressively higher. Monday, we're pre-New York. A lot of buy-sell liquidity taken. As you can see, we have buy-sell liquidity. Sell-side liquidity, I'm gonna call it here. Take sell side, takes buy side, retracement, mitigates fair value gap, starts going higher, right? When does it begin going higher? At around 8 a.m., right? Which means that it cannot really be participating in anything that's going on here, because otherwise, as an example, if we go to the 15-minute, we can see that around sell side, aggressive of higher, we definitely have a market shift. We definitely have a fair value gap, tiny one down here, or this pretty big one down up there, basically. Let's trace into it. Let's see if we get a 1-minute entry, which I don't think I actually checked. I'll look at that. It's actually a really good design. Right, trace into it, right? This could have been a loss as it is a market shift. This could have been a loss as it is a market shift. This is what I don't like about having a large fair value gap in the middle, and then it just gets disrespected. And we're looking for the next one, or we're just still counting this one, but price just went a little bit deeper, because as an example here, we could have taken a loss, right? Goes higher, then aggressively lower. Then we have a market shift, right? Pretty good for value gap in my opinion, pretty good entry, continues failing, right? The entry that actually works out doesn't have a market shift, so we would have not participated on it, meaning that we would have actually missed out on the one that take us out of those 2 losses that we would have taken on this move, right? Well, that is what it is. I don't think I would have participated on it even if this move lower, this little bit of a range here happened at 8:30 or after 8:30. Then, as you can see, just continue going higher without retracement, without taking sales liquidity. There's nothing that we could have done to trade Monday, and that is literally all that happened this week. Based on my 5 steps, of course, because if you go to ICT's methods, with ICT's concepts, with ICT's for value gaps, market shift, daily bias, whatever it is that you want to use, you can find opportunities. This fair value gap could have been an entry. This fair value gap here, maybe even the order block, could have been an entry for you. There's just so many things that you can do with ICT's mentorship. Just the mentorship, right? You can go to core concepts as well, but just the mentorship is already enough to create multiple strategies, multiple ways to trade the market. And the 5 steps are just what I've created, or what I've found to be good for me, right? This week, again, the only trade that I could have taken advantage of would have been 2 stays, right? Which would have given me a 3%, which is not bad. Or again, as I said, I likely would have taken a 4%, but as I mentioned to the Telegram that I would have taken 80% at that point, I'm just going to say that I took a 3%. That's good enough, right? And besides from that, I think that's it. Today's trade was actually really nice. But after a reaction like this, I don't really know what to expect. Of course, it was because it took a pretty strong, pretty big liquidity pool, sell side wise. At least that's what I like to think. Takes that and immediately starts going higher, right? So clearly that's something, right? But again, probably would have not participated on it. In target would have been a bit complicated, I'm gonna lie. That's pretty much it. That was my week. I took no trades, no wins, no losses, no break-evens, no trades at all. The only trade that I do regret not participating on was basically Tuesdays, right? I would have liked to be there to take it, but it is what it is. And I don't really regret today's. I think it was messy. I don't think I would have actually taken it. And it is what it is, right? So, hope you had a nice week. This is probably the last week resume that I'm doing publicly. And it's been a nice couple of months. Hasn't it been already? Yeah. Hope you enjoyed this video. Hope you had a nice week. Hope you continue to improve, and that's pretty much it for me. See you on the next one.